Hi and welcome back to my channel. My portfolio is cruising and there's been a lot going on in the stock market this week. As you can see, my portfolio value is now up to $9,190. That is the highest it's ever been, and I'm now teetering around the $2,000 mark in terms of total gain in my portfolio. On the day, we can see I'm up a little bit. On the week, I'm now up $90 or 0.99%. Over the past month, up $1,269 or 16%. Over the past 3 months, up nearly 35% or $2,300. Over the past year, up $1,960, and all time now up $1,990. Now, the $9,200 mark would be up $2,000 all time, and we can see on the day I did actually surpass that for a little while, but the stock market itself has been up and down. It's actually been down today, but I'm very happy with where my portfolio is at, and we'll get into a few of those stocks. But first, I want to talk about what I purchased this week. I did input another $200 into the portfolio. With that $200, I purchased $75 more Bitcoin, which bought me 0.00644 Bitcoin. My new position is 0.1982 Bitcoins, and my price the last week was $11,639.50. So significantly higher than it has been in the past. That dollar cost average is going up slightly, but Bitcoin has been booming. Next, I purchased one additional share of DKNG. That one share was $31.08. I now have 2 shares. That's DraftKings. And last, I purchased one more share of Logitech at $71.87. Logitech, of course, pays a dividend once a year. That dividend payment is coming up in September, and I want to take advantage of that as much as possible. But what is going to happen to the stock market? That's the real question that no one has an answer to, but everyone is asking. Here I have an article from Business Insider. The U.S. economy's depression-like collapse will set up stocks for a wartime boom, according to a top Wall Street strategist. The stock market may see a wartime boom next year following the U.S. economy's depression-like collapse, a prominent Wall Street strategist told CNBC. Economists predict that U.S. GDP could rebound to one of its strongest levels ever in the first quarter next year. Having to operate in a depression-like environment, knee-jerk reactions force companies to cut down on most costs and increase efficiencies. A lot of that boom will fall to the bottom line in a bigger way than people currently expect. We could have a big profit recovery. Here they say, again, we're predicting, or rather Jim Paulson is predicting something like wartime boom. He said what we've had in the last couple of quarters is a depression-like collapse, and what's going to be followed immediately is a wartime boom in the economy. Although U.S. GDP saw a record 33% decline in the second quarter of 2020, next year is expected to show one of the strongest growth comebacks following the economy's biggest collapse, according to Paulson. Economists predict that U.S. GDP growth on average will jump almost 20% this quarter, followed by 9.6% in the fourth quarter and 7.7% in the first quarter next year. That would be one of the strongest growth periods we've ever experienced, and it would have come after the biggest collapse we've ever experienced, he said. Going through a depression-like environment forced companies to knee-jerk react to cut everything they could try to survive this pandemic. What that's done is put them in a unique position with incredible profit leverage because they whittled down costs so low and increased efficiencies. In case of a wartime boom, a period where pent-up demand translates to increased economic activity, company profitability could see a tremendous boost in much larger way than Wall Street expects. A lot of that boom will fall to the bottom line. We've been over a lot of this. Paulson said, "I don't know how high this thing can go." He worried that investors have left a ton of underinvested stocks waiting for a pullback or short-term retreat in the opposite direction. According to him, the biggest risk to markets is a resurgence of the virus that leads to yet another economic shutdown. I think most people probably share that sentiment and that concern. He said, I do like that there's so many worried about that. There are a ton of portfolios waiting for a pullback, and if that doesn't happen, there's $5 trillion of money market funds that could find their way back into the market next year. On Thursday, the S&P 500 was less than 1% from a record high. The index closed just below its peaks in the past 2 trading sessions as investors fluctuated between tech megacaps and neglected cyclical stocks. Now, the main point here is that this man, Paulson, believes that the stock market is essentially going to struggle in the short term, but due to a decrease in the virus, really, the economy is fundamentally set up to succeed, and he thinks that things will turn out well in the long run. Of course, that's a very positive thought, and I think a lot of people would like to see that happen, so we'll just have to, I guess, stay seated and see what happens. And as always, I'd like to remind you to subscribe to the channel, like the video, and comment down below what you want to see next. On to my stocks. First, here we have Vivint Solar trading for $25.48. Pretty much what it was last week. My total return is $937 or 278%. On the week, like I said, down 0.23%. On the month, up 60%. Over the past 3 months, up 380%. And over the past year, up 240%. I like to talk about Vivint Solar every week because it's the largest stock holding in my portfolio, makes up nearly 14% of the portfolio, and I've really waffled back and forth between buying, selling, holding. I'm just not sure exactly what to do, especially because the price is so inflated right now. As I mentioned last week, that last earnings call for Vivint Solar was huge. They only lost 1 cent per share, which for a lot of companies would seem horrible. But the solar industry in particular has not struggled at all during the pandemic, and there's really been an increased demand for renewable energies. This is a sector that a lot of people think is not quite recession-proof, but at least recession-resistant. So it'll be interesting to see what happens with Vivint Solar. Next, we have Realty Income, which has struggled on the day, but my total return is still up 7.4%. I love the monthly dividend here. I believe the yield is somewhere around 4.5% to 5%. 4.4% here for Realty Income. It's been very solid for my portfolio, even in the pandemic. So we can see it's trading for around $61 right now, which is similar to a week ago, but over the past 3 months, up nearly 30%, and on the year, still down 15%, which for me means that there's still room to grow. 55% buy rating. I think there's a lot of positives here. I have 9 shares. If we go down here, we can see it's a real estate company which engages in generating dependable monthly cash dividends from a consistent and predictable level of cash flow from operations that operates through rental segment. Basically, the point there is that people struggle to pay rent, as well as a lot of other factors. But when people struggle to pay rent, Realty Income struggled just as many other REITs did. I think they're in a better position now than they were a couple months ago. And we can see that they've had consistent growth over the past 5 years, up 30% on the past 5 years. And that monthly dividend is a huge deal for me. It's a lot of consistency in my portfolio, so definitely something I want to continue purchasing. Next, we have Coca-Cola, a stock that has struggled pretty well over the past few months, but one that Warren Buffett, of course, likes, and something I like in my portfolio due to their long-term track record and really how spread out and diverse their holdings are. So on the day, not much movement at all, only a penny. Over the past month, we can see they're up 7%. Over the past 3 months, up 12%. But over the past year, down 8.5%. Same thing as everyone else. They hit really a wall when the pandemic shut everything down, particularly because restaurants, movie theaters, sporting events, concerts, all of those things were shut down. And that's a large segment of Coca-Cola's sales. But like I said, I like how diverse they are in terms of their holdings. So we can see for Q2, their earnings were down, but still positive. And the consistency here is really what we're looking at, meaning that no matter what happens, Coca-Cola is set up to make some sort of money in some capacity. I am down about $32 on this all time, but I like the strong dividend here and the slow, consistent growth. So even with this hiccup, they're up 16% over the past 5 years. Peaked here at about $60. So if they are able to return to that level, it could be a great buy, both in terms of portfolio growth and that dividend that I'm so concerned about. Next up is Penn National Gaming, who I talk about almost every single week. It has been a huge holding in my portfolio, seems to make money every single week, and I was right. As soon as sports came back, they saw a huge jump, particularly because of their holdings in Barstool Sports, and of course the casinos are now back open. So the total return now is $257.92, which is up 113%. Over the past week, we can see they're up nearly 20%. Over the past month, up 87%. 3 months, up 235%. Over the past year, up 192%. And 5 years, up 181%. I always like to point out that this big jump here was due to the Barstool acquisition. And then, of course, the markets struggled and casinos had to close, but they are back up. I wish I could have bought down there. If we zoom back in, we can see that it was down to about $4.50. I have seen on YouTube some people were able to purchase back when it was that low. I was not quite that smart. I wish I could have done so. Next is Walmart, a very consistent stock in my portfolio and one that a lot of economists believe will succeed due to their stronghold in the market. So my total return is only about $20 or 8%. But over the past month, we can see up about 1%. Over the past 3 months, up 6.5%. But the year is where we see how strong Walmart has been. The pandemic did not hurt them nearly at all because Walmart was able to stay open as an essential business. And as I said, that stronghold on the market means that people are always going to shop at Walmart. When things are bad, they're looking for great deals. And when things are good, Walmart is very convenient. So over the past 5 years, up 83%. Still a very high buy rating on Robinhood. And really the earnings is another great thing to look at here because they've been so consistent. They are trending slightly upwards, but the bigger deal there is the consistency. I think I'm going to purchase some more shares of Walmart. That's been very good for me. Last stock for today is DraftKings, trading at about $35.50. Of course, I bought that one more share last week and now makes up about 0.8% of my portfolio. Total return is only $2. But on the past week, we can see just as Barstool in Penn National Gaming has increased, DraftKings has 2, up about 3.5% on the week, 20% on the month. Over the past 3 months, up 37%, even with this downward trend. Over the past year, up 264% since that IPO. Another company that I think is going to succeed and one that I want to continue to hammer into my portfolio. No dividend here, but really I think there's potential for strong growth in the sports betting industry. That's something that I always like to talk about. Of course, we have to talk about Bitcoin. It's always been a staple of my portfolio and something that I believe in wholeheartedly. Quantity now is 0.1982 Bitcoin, makes up nearly 25% of my portfolio. The total return is $434.17, or about 23.5%. Down a marginal amount today. On the past week, down about 3%, but on the month, we can see this explosion of 23.5%. Over 3 months, up 30.5%. Over the past year, up about 1%, and 5 years, up 4,300%. I always talk about the fact that I think Bitcoin is going to peak sometime in December of next year, and that's why I'm going to keep purchasing it in my portfolio. My average cost is up to $9,300, but I'm not entirely concerned with that because I think Bitcoin has a lot of room for growth further. But let me know what you think about Bitcoin, really any sort of these cryptocurrencies, that whether it be Bitcoin, Litecoin, XRP, there's tons of them out there, but just let me know what you think about those. Thanks for watching till the end of the video, and I'll be back next week.